Hey everyone, Mortgage Nerd here. So today was some big news. Today is Wednesday, June 23rd, and the Supreme Court ruled that the FHFA, which is the Federal Housing Finance Authority, they regulate Fannie Mae and Freddie Mac, and you've heard me say a lot of bad things about the decisions they've made over the last couple years. Actually, here, take a look at this clip from this video where I break down the structure of the secondary markets and who FHFA is, Fannie Mae, Freddie Mac, and all that. This was during the pandemic, when the pandemic started, and talking about all the decisions that they're making and how it could really hurt the mortgage industry. Take a look.
Now, this gentleman over here, I hear he's a libertarian, which doesn't matter his political view, but it matters in how he views economics. A libertarian says, let the markets do their own thing. Let them crash, let them fail. To a certain extent, I agree with that. But hello, we've been doing everything right. So get this. This is where it's like, what the heck is gonna happen to the mortgage industry? If someone misses, if their forbearance is the very first payment, even though the CARES Act, the president, the Congress, and Senate all agreed that allow people to do a forbearance, do not count it as a default against them. But guess what? If you miss your first payment as a forbearance, that payment on July, if they're funding now in May, when they close, there's a 5 to 7% penalty, 500 basis point to 700 basis point penalty to these entities for writing that loan. How am I gonna give you a loan and then you can't pay it because you gotta feed your family and everyone is saying, don't worry about it, the CARES Act is gonna help you, and you missed that payment and now we're charged 5 to 7% because this guy right here is saying, too bad, so sad, let the markets fall as they may. It's just a virus, it's no big deal, right? Wrong.
So that was over a year ago. And then at the end of last year, the FHFA came out with this adverse market fee. It was a fee that was added to refinances and made it more expensive for people to refinance their homes. And you know, what was the adverse market? The market was booming, everything was going great. There aren't all these foreclosures, which I've been saying since the beginning of the pandemic, that foreclosures were not going to come in rampant. And when they do come in, it's not going to be because of the pandemic, it's going to be because people who were going to go into foreclosure no matter what. But the FHFA was now ruled to be unconstitutional by the Supreme Court. So this allows for President Biden to overrule the appointee that President Trump had put in place, which is Mark Calabria, and who I talk bad about in my videos because I don't like the decisions he's making.
The FHFA, Mark Calabria, I've talked about him before. There's a whole long 10-minute video about what the heck was this guy thinking about forbearances in the secondary market. That was months ago when COVID really started. So now what are they doing? They're saying any loan that comes through Fannie or Freddie, those are conventional loans, is now gonna have a 0.5%, that's 50 basis points, 0.5% hit to the rate.
Of course, now they're saying, you know, meeting the agenda, the left agenda. And I guess Mark Calabria was meeting the right agenda. I didn't agree with that. I also don't agree with what they're saying now with the left's agenda with this, which they're saying, oh, now Biden can appoint someone who can really help minorities and everything get mortgages. Well, guess what? If someone can't get a mortgage today, it's because of the left. It's because the Democrats over-regulated our industry after the market crash. There were some good points in all those regulations that they put in. One of the worst was appraisals. Appraisals needed to be overhauled. But what they did is they had appraisers go through way more regulation. They added a middleman kind of appraisal management company, which takes money, which increased the cost. That was the easiest example. But I said it 10 years ago. I said there's going to be a reduction in the amount of appraisers because I saw it happening. That was not a prediction, that was happening. No new appraisers because it's so much harder to become an appraiser. The old appraisers were like, I'm not doing this new way of doing things, I'm out of here. And so we saw a shortage of appraisers. It didn't hurt us. And then a couple years ago, they started with appraisal waivers. So it kind of eases the need for all these appraisals. But right now, if you bought a home recently, if you're trying to buy a house or you're refinancing, you are experiencing this really adverse market, not the adverse market fee on refinances, an adverse market in appraisals. Appraisals are taking 2 and 3 weeks in South Florida. They're taking 4, 6, 8 weeks in other parts of Florida, California, other areas. It is crazy. Overregulation by the left has caused appraisal issues, appraisal shortages, and now appraisal timeframes to take longer, plus it's more expensive for the consumer. That's just one example of overregulation. Overregulation also prevents the minorities and the poor people from getting mortgages, not because they're minorities, because really we don't care in the mortgage business. We want to make money. We want to close as much business as possible. We don't care what your credit looks like. We're doing everything we can to, like we say, throw it against the wall and see if it sticks. Yet, it's the agenda that they're coming out and saying, oh, now that this Trump-appointed person, who again I didn't like anyway, is out, now we can bring someone in to usher in a new era of helping minorities become homeowners. Such BS. God, I hate politics. But back to the story here. One thing I do like that we expect to happen is that there's going to be less focus on the qualified mortgage issue. So a qualified mortgage is conventional FHFA. Qualified mortgage rule was a good rule that came in after the market crash. And it did certain things, like you can't have a prepayment penalty. Adjustable rate mortgages really have strict rules. It's not what it used to be with adjustable rate mortgages as well. There are non-QM mortgages, non-qualified mortgages. Remember, qualified mortgage is conventional FHFA. Non-qualified mortgages, everything outside of that, those have their own sets of rules. But part of the QM rule, the qualified mortgage rule, was really strict on debt to income ratio, saying you had to have a 43% debt to income ratio. Guess what? Most borrowers are not under a 43% debt to income ratio. If you insert that rule now, we're going to have a lot of issues. We're going to have a lot of people that can't afford property and a lot more. And this was a QM rule, again, that came from the Democrats. I'm not picking on Democrats in particular. It's just they are the over-regulators in our industry and any industry. That's how they show their muscle and they get votes, because they're like, I'm doing something. While the Republicans are more like, let the free markets be the free markets. I see what overregulation does. I see what underregulation does. I lived through the market boom and bust. That was underregulation. So for this debt to income ratio rule to eliminate a ton of mortgages, it'll cause a crash with everything that we have going on, where it's primed for a crash. It's primed for these rules to be too strict when we have this overinflation in certain pockets, or individuals have certain overinflation because the individuals are taking a house and paying 20, 30, 50,000 over the appraised value. So now you insert really strict mortgage rules, and it's going to cause the values to flatten, maybe go down a little bit, and those people that paid 50,000 over, yeah, they're in a bubble. But overall, it's not a bubble. So I think that would be a good rule. If they do have someone come in and does not execute the QM rule, hopefully they remove this stupid refinance fee, this adverse market fee. You know, luckily my doom and gloom in that video I showed earlier from a year ago, it never happened. So at least that didn't happen, but hopefully we have someone that makes better decisions in that sense and isn't going to come in and start adding more and more regulation, as opposed to removing some of this regulation and then making way for buyers. Of course, we don't really need new buyers right now. We need more sellers because we have no inventory. But I think that is starting to ease its way back in. We're getting more inventory as well as the vaccine is coming through and everything is easing on the COVID front. So there are some rumors that Calabria's replacement, at least in the interim, is going to be someone who did work with the CFPB, that's the Consumer Financial Protection Bureau, during the Obama days. The candidates include Eric Stein, Mark Calhoun, who's a past leader of the Center for Responsible Lending, and Sandra Thompson, who's presently inside the FHFA. So it'll be interesting to see what happens. It's kind of weird that Supreme Court came in and ruled it unconstitutional, but I'm glad this happened. I just hope that the agenda isn't all that's going to be pushed, and that we evil, racist mortgage people that hold down the little man. Come on, I don't care. I want to close loans. I want to close everyone's loans. I want everybody to be happy. I want people to be homeowners for the first time. I remember when I bought my first house, I was 22. My friends thought I was crazy when I said I'm going to buy a house, and I was 18. And I've owned several properties in my 20s, and then the market crashed. I want people to experience that. I want people to be like, when I remember I get emotional when I walked out of my closing and I called my then girlfriend, now wife, and said, I'm a homeowner. Yeah, that's what I want. And that's what everybody in the mortgage industry wants. We're not discriminating. But anyway, thank you so much for my rant. Mortgage Nerd out. Sorry I don't have my glasses. Bye.